Today, home prices returning to pre-pandemic levels fast. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and problem news with a distinctively Australian flavour. Over 2020 and 2021, the RBA cut its already emergency low cash rate to a remarkable 0.1%, and the pantheon of government stimulus drove house prices up across the country, in some places by up to 40%. This, of course, was from an already unaffordable high base and at the expense of blowing the debt balloon up even larger. Now, of course, following significant rate rises, which still put the cash rate below its neutral setting, and with more expected to come according to the markets, unsurprisingly prices are now falling. And the rate of drop is increasing in many markets, though of course each market has its own characteristics. But according to the AFR, house prices in 11 inner Sydney and 46 inner Melbourne suburbs have sunk below their pre-pandemic values, as rising interest rates erode the gains made during the past 2 years, according to data from Corelogic. Darlinghurst, Surrey Hills, Forest Lodge and Newtown in inner-city Sydney posted the sharpest decline in median house prices since the onset of COVID-19, with values falling by 6.7%, 6.5%, 5.3% and 2.9% respectively. House prices in some inner-city suburbs, such as Newtown, have now dropped back to their pre-pandemic levels, according to Corelogic. In Melbourne, house prices in South Melbourne, St Kilda, Middle Park, Albert Park and Malvern East have also surrendered their pandemic gains. Since March 2020, median house prices have dropped by 14.2%, 12.3%, 10.6%, 8.1% and 7.2% respectively. Eliza Owen, Corelogic head of research, said more suburbs will likely see prices revert to pre-COVID-19 levels as the downturn deepened. Prices are expected to continue declining, and the decline is expected to become more widespread, so there may be more suburbs across Sydney and Melbourne, in particular, that sink back below their pre-COVID levels, Ms. Owen said. At the citywide level, it would take about a 10% decline in Melbourne and around a 20% decline in Sydney to push values back down to levels at March 2020. Many economists are expecting Sydney house prices to fall by around 20% peak to trough, with ANZ expecting a 14% decline this year alone. Melbourne's expected to fall by 11% this year and by another 6% next year. The high home value, location, and the extent of the recent housing boom likely contributed to the rapid deterioration in prices in inner-city areas, Ms. Owen said. There's been a lot of sensitivity to increases in interest rates in more expensive segments of the housing market, which could partly explain the steep drop in values across the city and inner south of Sydney, where there are a lot of those housing markets, she said. Each of those suburbs has a median house value above the Greater Sydney median value. It's a similar story for Melbourne, where the house markets that have seen a big deterioration in value are each well above the greater median house value of $964,950. In the unit market, median values for 44 Sydney suburbs, or 11.8% of all suburbs analysed, have lost their pandemic growth, while prices in 57 Melbourne suburbs, or 21.7%, have now fallen below March 2020 levels. Unit prices in Epping, in Sydney's northwest, have dropped by 8.6% since March 2020. St Leonard's in the Lower North Shore fell by 6.5% and Chatswood fell by 5.2%. And in Melbourne, unit values in Essendon North slumped by 14.8%, Ascot Vale by 13.7% and Kew East by 12.6% during the same period. Inner city markets generally saw less of a boom through the latest upswing, while there was more of a premium on lifestyle markets that offered space, low density, and beautiful natural surrounds for outdoor activities, as Owen said. Now that the market is moving into the downswing phase, rising rates have been more likely to erode the modest gains of inner city or less desirable markets. And falls are being seen elsewhere, with reports in the Courier Mail suggesting that the Brisbane property boom is over, with some prices dropping by 41% in just 3 months. They reported that the boom for Australia's leading property market, with Brisbane suburbs that were in the grip of FOMO madness just 8 months ago, are now seeing home values drop by as much as 41% in 3 months, while Greater Brisbane has recorded 2 consecutive months of negative price growth. They went on to say that the heat has also come out of the auction market, with Brisbane auction clearance rates as low as 33% this month, after regularly tracking above 70 and 80% during the boom. Greater Brisbane has now seen 97 suburbs record negative house price growth over the 3 months to the end of July, according to property data analyst PropTrack. And following my recent shows on falls in the Illawarra, I received confirmation from one local agent yesterday that house prices were indeed down by at least 10% from their peaks, while units in some areas in Greater Wollongong were down significantly more than that. Now, of course, all of this has consequences, because many who bought into the bubble on a bubble are already seeing their mortgage repayments rising, as tracked by our mortgage stress metrics. The next edition, by the way, will be out 1 September. But I can say we are already seeing more difficulty in the numbers. Negative equity is also now potentially a thing for those who grabbed the government-backed low deposit schemes. So the question now, of course, becomes how far will prices fall, and when will the RBA and government start to fret about the economic fallout? But with high debt, that's both household and government debt, and boiling inflation, we may not see a reversal anytime soon. And the latest cash rate rises have yet to hit mortgage accounts, so there is more pain already in the system. Thus, we should expect prices to fall further, possibly much further, and therefore more of those pandemic bubble prices will revert to their pre-pandemic levels. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Brisbane Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.